What's going on, everyone? My name is Anthony Pasquarella, licensed real estate salesperson with the Schenectady Real Estate Team. The Schenectady Real Estate Team specializes in investment properties. However, we are also a full-service residential brokerage. So whether you're trying to put your home on the market, buy your new dream home, or even start your investment portfolio, you can do that with us. As you can see, today we're talking about the lovely Capital Region, one of the best places to invest in the entire state. Today we're going to be talking about what we think some trends will be for 2021, some specifics about Rensselaer County, Albany County, Schenectady County, and also just some main points that I want to get across for anyone who's just beginning in real estate investing, or anyone who's been doing it for a while but wants to, diversify their portfolio into the Capital Region. Before we start this video though, I'm going to need you to watch these two videos. I'll put one right here and one right here. Hopefully I can put two screenshots. One is going to be real estate investing in Albany County with Vitaly Volpov, another licensed real estate salesperson with the team. And then one's going to be about Schenectady County with Vitaly Volpov, another team member. So these two videos go into specifics and a lot of details about Schenectady County and Albany County. We didn't end up getting to Troy, so I'm going to do that today. But before we do that, before we watch this video, need you to watch these two really quickly. Pause this and then get back to you soon. But other than that, looks like we're ready. Let's do it. Welcome back. Hope you enjoyed those two videos. Both Dom and Giovanni, incredibly hardworking guys. If you're looking to sell your home, put your home on the market, buy a new home, start your investment portfolio, definitely reach out to those two guys. Contact information below. So let's get into the video. There's three main points that I want everyone at home to get out of this. The first one is it's that markets work in cycles. Just like the stock market, there are ebbs and flows in the real estate market. This past summer, in fact, this past year, it's probably still going on now. It's a seller's market. What this means is that there's a very low inventory, but a lot of buyers looking to either move or start their investment portfolio or whatever. There are a couple of reasons for this. One, rates were really low. The Federal Reserve decreased rates to historic lows because of the pandemic. When you decrease rates, it makes it easier to borrow money. And the goal was for banks to lend more so that there's more money flowing into the economy because, everything was shut down. So that kind of spurred a lot of price increases you probably saw this past summer. Market was really hot. It seemed like everyone wanted to either sell to get a premium for the homes, where that meant buyers had to pay a premium in order to purchase that home. So that's why it's a seller's market. A buyer's market is that there's a lot of sellers, but not too many buyers. In order to sell their home, sellers are willing to decrease the price just so they can meet at a price that everyone's comfortable with. That's a buyer's market. People could argue that in the next coming years, a buyer's market could happen. Just because once rates start to increase and the Federal Reserve wants to contract the economy when we're back open so that inflation doesn't run amok, you could argue that's going to be more of a buyer's market and that people are going to wait to maybe purchase a home then. But the thing is though, when it comes to markets working in cycles, is you can never really time the market perfectly. Let's say, I'm going to bring back stocks because I feel like it's an easier concept for some people to understand. Let's say in 2011, you want to start investing into the stock market, but you had this hunch that, there's going to be some sort of dip in prices and you're going to wait for the dip so that you can buy in and start investing. If you waited for that dip, you wouldn't start buying until 2020 because it was a bull market from 2010 to 2020, the longest in history. So I guess the point I'm trying to make is that, especially when it comes to real estate investing, do not wait for the dip. Don't try and time the market perfectly because that's when you're going to miss out on opportunity. The best time to start real estate investing is the second you are ready. For me to say the best time to start real estate investing is right now would be incredibly misleading, but I would say the best time for you to start your real estate investing journey is really the second you're ready. When you have all your ducks in order, you're pre-approved, you have people who are lined up to maybe help you renovate, stuff like that. Because when you wait for that dip in prices, maybe there's some sort of buyer's market coming up soon, that's when you miss out on opportunity that you would pass up just because you think, oh, prices are too high right now. I'm gonna wait till it's a buyer's market. So I guess the main point I'm trying to get is you can't time the market perfectly. Obviously, some people can, but by doing that, you're missing out on a lot of opportunity. So that's the first point I want to make. Markets work in cycles. Second point I want to make is real estate investing is an investment. I know what you're thinking at home. You're probably like, yo, no. But the reason I want to bring this up is I found this really fascinating stat a while back. We had to read this book called After the Music Stopped, and it's about the financial crisis of 2008. We had to read it for one of the classes at school, and there's this line in here that completely blew my mind, but it just makes so much more sense now if you understand what it means. So let's read this real quick. After the Music Stopped by Alan Blinder. Good book. So, on balance, the relative prices of houses in America barely changed for more than over a century. To be precise, the average annual relative price increase from 1890 to 1997 was just 0.09 of 1%. This means that adjusted for inflation, that's what annual relative price. I'm starting this far. All right. This means that adjusted for inflation, starting in 1890 to around the 1990s, the relative prices of homes throughout America didn't increase in price essentially at all. It stayed the same. In fact, only increased 1%. This changed in the 90s when mortgage-backed securities were seen as a better alternative to buying bonds. So what's a mortgage-backed security? Mortgage-backed securities is a package of loans that banks sell off to investment banks. So banks don't want to hold on their balance sheets a bunch of mortgages that they're lending out to just residential homeowners. So what they do is they package them all up and sell them on the open market to investment banks. When this started happening, investors expect a return every year. In fact, mortgage-backed securities were very popular because they had a better return than regular bonds or treasuries. So since they're expecting a return every year, banks had the incentive to loan more money to people who are looking to purchase a home. So starting in the 90s, banks relaxed their lending practices and started lending to more people. When more people can buy, like kind of what's going on this past year, there's more buyers than sellers. It's a seller's market, and this increases the prices. Now that mortgage-backed securities have been popular now for a couple of decades, prices have continually increased since then. I can show you this. There's a screenshot right here. I'll put it right here. It's the Case-Shiller U.S. National Home Index of prices. So the index started in like 1987 or something. And as you can see, it goes up continuously until now. Another thing that I learned was actually from Bigger Pockets. Bigger Pockets is a media company that specializes like in real estate investing and stuff. And they have this forum. It was a podcast that I learned it from actually. In this podcast, the host, he was talking about how he actually bought his newborn an investment property. Like he bought his newborn a rental instead of starting a college fund. So the $10,000 he had to start a college fund for his newborn, instead of starting a fund, he purchased a home so that by the time the kid turned 18, the home appreciated in value over the 18 years. Also the cash flow that he received every month. Then he transferred the title to the kid's name because they're now 18. And now they have, once they sell the home, they have a substantial amount of money to pick essentially any college they wanted to go to. So the main point I'm trying to make here when I say real estate investing is an investment is that over the long run, by investing in the capital region, making strategic improvements to your investment property, your property will increase in value over the long run. So I guess another point I'm trying to make is real estate investing isn't anything to be afraid of. In fact, it's probably one of the safest investments you can make. So I know that was kind of like a mouthful. I went a lot of detours, but that's the point I'm trying to make. The third one is our obligation as an owner of real estate. Our obligation as an owner of real estate should be to make the place in which you're investing better than when you found it. Fact of the matter is, in the capital region and also all over New York State, people are leaving in droves. In fact, I have this stat in front of me that since 2010, New York has lost a net total of about 1.4 million residents to other states, more than any other state in the country, according to analysis by the Empire Center. Trying to scroll. 2019 report found that the largest share of people that left New York State are middle-class workers and high-income earners. And our Governor Cuomo, attests to this stat because of the bad weather. But at the end of the day, there is a core problem. It's that, people always think the grass is always greener somewhere else. But I think that as real estate investors come to in a collective to make the capital region a more viable place to live, more viable place to conduct business, just a more viable place to raise a family. As people come together and do that and provide such services for people. One individual I want to shout out, I don't know if you'll ever see this video, but I thought I'd give him a shout out. Individuals like Jaqueen Hoke, who is the COO and Strategic Planning and Development for Upstate New York Black Chamber of Commerce, and co-founder of Fourth Family, is bringing entrepreneurs to the empty buildings that cover South Pearl Street. And in my opinion, we need people like Jaqueen to help neighbors bring entrepreneurs to South Albany. But it's not just South Albany. There's places all over the capital region that haven't seen as much appreciation as other areas. And just because of the stigma that surrounds it. And as long as the cycle we can break that wheel, the vicious cycle of stigma that some areas just, aren't as good as others, which is incredibly unethical and people shouldn't think like that. Then, we can bring entrepreneurs to the area, make our communities a safer and nicer place to live. So I think that's the goal at the end of the day. And those are the 3 points I want everyone to get out of this video. That's just my opinion. And now that we got those out of the way, let's get to analyzing the capital region. All right. If you made it this far, I appreciate you sticking around. If you could do me a favor, leaving a comment with any questions you have, or leaving a like if you got any useful information so far out of this video, be greatly appreciated. So first, we're going to be talking about the wonderful city of Troy. A couple of fun facts about Troy. It was founded as a steel hub back in the day, probably around like the 17 or 1800s, before Pittsburgh became the main steel city in America. It's right on the Hudson River, so you can go north to Canada, south of New York City, west on the Erie Canal when it was here. So that's kind of how Troy was founded, as a main steel manufacturer. We're going to get into it. So first thing I want to talk about when it comes to each of these counties, first Rensselaer County, which Troy is located in, is some property tax rates. So the equalization rate in Troy is right now is 89.9%. That just means that of the total market value, the assessed value is 89% of that. And that's how taxes are based off of. So right now, total county, city, library, and property for Troy Central School District, it's $23.03 per $1,000 assessment. And then for Lansingburg Central School District, it's $20.61 per $1,000 of assessment. So those are the those are total tax rates for the two main school districts in Troy. And then the average property tax rate for the entire, this is just property tax rate, for the entire Rensselaer County is 2.48%. Last video we made, I focused a lot about, average sale price, amount sold in the different areas in Schenectady and Albany. For Troy in the last year, so this is from January 2020 to December 2020. Like we mentioned before, this was a seller's market, so prices were up a lot. The average multifamily sold price in the city of Troy, this includes all the sub areas in the city of Troy, the average was around $211,000 for multifamily, and then the average sold price for a two-family home in the city of Troy was around $129,000. So the city of Troy is sectioned off into a couple main areas. So the first one, we have Troy Hill, where RPI is located. Since Troy is on the Hudson River, it's kind of like a valley, so it's a hill going up to RPI. That's what's called Troy Hill. We have the River Street area, which is River Street is the downtown, which is right on the river. We have South Troy, which is where Hudson Valley Community College is located. And then we have Watervliet, Green Island, and Cohoes. So for investors, these are the main places that we want to focus on. And I'm going to talk about each of these a little more in detail. All right, so first, RPI. Rensselaer Polytechnic Institute is one of the hardest colleges to get into in the country. I have a couple buddies who go there. They tell me all the time they're going for computer science, how difficult it is, but God bless them. I could not do that stuff. So because of this, there's a lot of students looking to live off campus. RPI is also an older college, so there's a lot of historic homes in the area. if you happen to get your hands on one, I think with strategic improvements, you can add a lot of potential equity to these older homes in the RPI area. Also, when it comes to older homes and historic properties, New York State does a great job at giving grants to older historic properties as you get on the registry. I believe the office is called SHPO. So look up SHPO, State Historic Preservation Office. If you do have your hands on an older home that is on this registry, they give you tax grants to update the facade, do internal renovation, stuff like that. So that's what you're going to find mainly in the RPI and Troy Hill area. The largest employer and another main part of the RPI Troy Hill area is Samaritan Hospital. So as a real estate investor, you want to look up the largest employer in different places, because this is going to tell you who the type of people are that are going to be living in your area. And in this case, it's RPI and Samaritan Hospital. The next sub area I want to talk about is River Street in downtown Troy. In the past couple of years, this area has seen a lot of buzz, a lot of renovations that make this place kind of like a cultural hub, if you will. So first off, in July of 2019, River Street Market opened. This is a mixed-use waterfront development where they have a bunch of bars, restaurants. They actually have a theater. This theater is called the Experimental Media and Performance Arts Center. This brings a lot of culture to the area, a lot of performers from all over the country just to check out this Experimental Media and Performing Arts Center. So when it comes to Troy, you're going to get a diverse group of people, which makes it one of the best places to live in the entire capital region. Another event that goes on around the River Street area is Rockin' on the River. So this is a summer event from July 5th to August 7th, or like around those weeks. And every weekend, it's every Wednesday night at Riverfront Park. They have over 5,000 people in attendance every single week. When you have all the business, you have all the people coming towards an area, this is where you're going to want to invest, because people are going to want to start living here. You know what I mean? So we have Rockin' on the River, and then we also have the Troy Farmers Market. So the Troy Waterfront Farmers Market is another summer event that they have. Brings over, according to the website, over 18,000 people in attendance every single summer. So when it comes to Troy, it's definitely a cultural hub, which differs a lot maybe from even Schenectady or Albany County. So this is definitely going to want something. This is definitely something you're going to want to focus on when it comes to understanding the Troy area. Okay, so we talked about the RPI and Troy Hill area. We touched upon downtown Troy. Now we're going to talk about South Troy really quickly. South Troy is home to Hudson Valley Community College. Also, Wineskill is a sub-area of this. Student housing has mainly been the focus when it comes to Hudson Valley. There's been a lot of large apartment complexes, so to try to take advantage of the student housing demand would kind of be not ideal, just because of the large apartment complexes that they've been building. So they've kind of taken up the market when it comes to that. Another thing that is in South Troy is a lot of professional services. We have Regeneron. So Regeneron has actually been a news cycle recently because they do a lot of drug testing. They do a lot of pharmaceuticals. That is actually Rensselaer County. I don't think it would really fit on this map, but it's like somewhere in the Rensselaer County. They do a lot of good stuff, and they employ a lot of people. And then also there's Rensselaer Technology Park, which is located south of HVCC on Route 4. Understanding this, that both Regeneron, Rensselaer Technology Park, two very large institutions. This is going to bring people to the area. And as I mentioned before, the average price of multifamily and two-family homes in this area was around $211,000 for multifamily, and then two-family was $129,000. So this means for beginner investors, Troy has a lot of opportunity. I would definitely check out this area if you're looking to invest or if you're looking to diversify into Troy. Of Waterville, Green Island, and Cohoes. What makes these three towns incredibly important to understand for investors is that they're all located on 787. So 787 is the commute to work for thousands of people who work in Albany, which is only a few miles down south, and also for people who work in the Troy area who live in Albany. So because of this, because there's so many properties available on the 787 route, Towns like Waterville, Green Island, and Cohoes have seen a lot of appreciation in the past couple of years. In fact, in the last 2 years in Waterville, there were 43 multifamily homes listed for an average sale price of $208,000. Another thing about Waterville is that it's an easy commute, like I said, Albany, but then also to Latham and Loudonville. I didn't put it on this map because they're technically Albany County, but Latham and Loudonville are like in this area right here. So if you work in this area, which has a lot of professional services, a lot of businesses, but live in Waterville, it's an easy commute using Route 7. Look, Cohoes. So I want to touch on Cohoes really quickly. They recently had a $15 million grant to update Cohoes Boulevard, and what Cohoes Boulevard is pretty much like the end of 787. As it turns into like a 2-lane road, they invested a lot of money in making, one, this road look nice, and two, making it more like an easy commute from people to Cohoes to Albany, or maybe Waterville to Cohoes. Caused a little bit of appreciation in property values surrounding this. Two main streets that I want to talk about would be Main Street, or not want to talk about, but want to focus on, would be Main Street and Remsen Street. These two streets have a few restaurants, a couple bars, and a lot of nice multifamily homes that investors should keep their eye on for sure. And then last but not least, Green Island. So Green Island, also located at 787. It's the smallest of the three. It's a small suburb, only 2,200 residents. That's what it has in front of me. And it's conveniently connected to downtown Troy by the Collar City Bridge, which I kind of drew right here. So it's super close to downtown. Maybe if you want to live in Green Island for more like a quaint community, but want to work in downtown Troy, very common for people. Another advantage of owning a property in Green Island, they have their own utilities, since it pretty much is an island, so they have their own utilities, and they're known for having a little bit lower taxes because of that. So those are the main parts of Troy. I hope you guys got a lot of information out of it. Anything else that you know that maybe I didn't touch upon, definitely leave a comment below. Once again, I appreciate you sticking with me. Right now we're going to do a brief overview of Albany County. For a more in-depth look, definitely check out the link in the description. I mentioned this before, the video with Vitaly Volpov. He goes really in depth about each sub area. He's from Albany, so he has a lot to offer about each different town, neighborhood, very specific in Albany County. So right now I'm kind of just doing an overview for those who aren't from the area. If you are from the area, you probably know a lot more than me. So I'm just going to give you a few points of data that I think will be helpful. First, I want to talk about the average sold price of two-family and multifamily homes. From January 2020 to December 2020, the average sold price of two-family homes averaged around $176,000, while for multifamily, there are 91 sold during this time period for an average sold price of $476,000. Property taxes in Albany County. So if you want to get into specifics for each school district, there's a lot of different school districts in this area. Go check that out, maybe give a phone call to the school. But for now, I want to give you the average tax price. So for the average property tax in Albany County, this is just from doing a little research, it turns out to be 2.1%. When it comes to Albany County, beginner investors should lean towards a couple different areas. Two that I want to point out right now is South End and Arbor Hill. So South End is connected to downtown Albany by South Pearl Street. If you're from the area, South Pearl Street is connected to the Times Union Center and kind of just like the center of the city of Albany. In the past, South Pearl Street hasn't seen a lot of, I guess, the appreciation that we want to see. And especially if you go more south from the Times Union Center, a lot of vacant buildings, not as much commerce as we want, you know what I mean? So if you are an investor in the area, I feel like there's a lot of opportunities to maybe start a business in this area, maybe get in at a price that's more comfortable with you. When it comes to opportunity, the state of New York actually recently, I think it said 2017, they released an act of opportunity zones, or they released a federal tax act that includes opportunity zones. So what that means, opportunity zones provide a tax incentive for investors to reinvest their unrealized capital gains into dedicated opportunity funds. There are 6 of them in the city of Albany. The 2 I want to focus on are Arbor Hill and South End. So for beginner investors, definitely take advantage of these opportunity zones because it's just putting more money in your pocket, and also it's revitalizing areas that haven't seen as much appreciation as others in the past. Like I mentioned before, when it comes to investing in real estate, you want to understand where the largest employers are. So the largest employers in the city of Albany include Albany Med. Albany Med is in the Helderberg, Whitehall, and Pine Hills neighborhoods. It's St. Peter's Hospital, very near in the Buckingham Lake and New Scotland Ave area. And then state employees that work downtown. Like I mentioned before, a lot of these state employees live up a 787 up towards Troy, and they commute here, one of the largest employers in the capital region. And then of course, all the different colleges, there's U Albany, St. Rose, Sage. This means there's gonna be a lot of graduate students maybe looking to live and rent in the area. So I'll definitely focus on these areas where people are looking to live. Now that you got a brief overview of the city of Albany, I want to talk about the large towns that surround it. First, we're going to talk about Loudonville and Menands. So Loudonville is where Siena College is located. It's a private institution that brings a lot of business around the area. Also, Loudonville Menands has a lot of higher property values because of large square footage. And also in the past, it's just known as the well-to-do area. So another large employer in Menands is actually Zones and Infrastructure. They do a lot of like technology and stuff like that. So maybe this isn't an area to find your next 2-family or multi-family home. Next 2 towns I want to talk about, Guilderland and Colony. These are both central hubs of commerce. There's 2 large shopping malls, Colony Center and Crossgates. A lot of professional services. These 2 places have seen a lot of appreciation in the past, and there's actually not much land available left for development. So this means you're going to have to get in at a higher price in these 2 towns. When it comes to these 2, getting your hands on maybe a rental property might be a little more difficult considering a lot of the large apartment complexes that are being built. But if you do get your hands on an under market value single family home, this might be an opportunity for a flip. We go into more detail about that, of how Colony might be a great town where you can start your first flip. And then lastly, we got the Delmar. Slingerlands and Voorheesville area. This is south of Albany. It has a couple of the highest ranked school districts in the area. So this is a place where a lot of people want to settle down and live. The co-broker Vitaly Volpov, he has his own YouTube channel. Check it out. It's called SUCCEED REI. He goes into how he actually got his first duplex in the Delmar area. He kind of walks through the process of him doing that. So there's definitely a lot of nice duplexes in the area. It has appreciated a lot, so you're gonna definitely pay a price for it, but it's a beautiful area. And another thing that makes this Delmar, Slingerlands, and Voorheesville different from the rest is there's actually a lot of land available to develop, which is opposite of Colony and Guilderland. So we think that this southern part of Albany has exponential growth opportunities. And that's kind of the run through. Of Albany County. We got the largest employers. We got a couple small sub areas in the city of Albany where we're going to look to invest in opportunity zones. And you got a brief overview of the large towns in Albany County. And stick with me as we're going to talk about Schenectady County next. Again, thank you for sticking with me this far. I hope you got a lot out of this video. Last but not least, we're going to talk about Schenectady County, where I was born and raised. If you know me, I'm really passionate about everything Schenectady, so bear with me as we go through the facts and figures. First, the average property tax across school districts averaged around 2.88%. The average sold price of 2-family homes in the city of Schenectady was around $118,000, and then the average sold price of multifamily homes in the same time period, which is from January 2020 to December 2020, was $224,000. Once again, all this data is from the MLS. So a little history about Schenectady. It is the original headquarters of General Electric, which was founded by Thomas Edison in the early 20th century. This brought a lot of immigrants from Ellis Island north to the area, which created the suburbs of Rotterdam, Scotia, parts around the Union College area, as well as Rexford, also known as Niskayuna. But what's changed? Now that GE only employs around 3,000 people, Schenectady hasn't been the electric city like it used to be. However, in the past couple of years, there have been things to put the city back on the map. Most notably, Rivers Casino was constructed at the end of Erie Boulevard around the Mohawk River. While I don't think this is the end-all solution whatsoever, it's definitely a start. The main problem is that Rivers Casino isn't really walkable to the downtown area. So what this does, it created 2 different centers of commerce. It decreases the potential for one centralized, booming, place where people can shop, eat out, spend money, stuff like that. So if this was walkable from Rivers Casino to the downtown, we think that Schenectady would have the potential to be a nice, walkable, lively city, but where it is right now, it's a little hard to connect the two. So the Schenectady Metroplex has done a lot to invest in downtown. In fact, in the summer, the city is home to a very lively bar and restaurant scene. But the thing is, we can't just rely on the state entity solely to invest in downtown. One thing we can do as investors is bring commerce and jobs back to Schenectady. First, sprawl has called outward mobility to the suburbs surrounding the city center. There's nothing wrong with creating quiet suburbs around the city, but this development in the long run isn't sustainable. When your home and your place of work is accessible without even driving there, it one, saves a lot of time out of your day, and two, is really good for the environment because it decreases the traffic. Let's bring notable employers to downtown first, and then everything else will follow. We already have a bunch of large employers in the area. A couple of names off the top of my head, obviously GE, Union College. We have Knowles Atomic, Golub, Gillespie Group, Ellis Hospital. A lot of large employers already in the area. It's just that the high taxes have turned a lot of people off. So if there's a way we can create incentives to bring large employers to the Schenectady area, I think everything else will follow. The biggest thing that investors need to focus on in Schenectady specifically is contra development. What this means is turning old empty buildings, rehabbing them, and turning them into useful structures. I can name probably 3 or 4 buildings off the top of my head that are on State Street or Ely Boulevard that are currently empty, but we could turn into useful buildings. When we keep building brand new apartment complexes, in the long run, this isn't sustainable. And I feel like building the apartment complexes first and expecting for people to move in without having the businesses here, I feel like that logic is kind of backwards. So as investors, what we can do is pool our resources together. If you actually know somebody in commercial real estate, investment banking, I think Schenectady is ready for the influx of capital. Another idea that could help the city in the long run is making Erie Boulevard a walkable street. Right now, while it is kind of long, it's probably around like 2 or 3 miles long, connecting downtown to walkable to the Rivers Casino, this will create will create opportunity for businesses to pop up along that road. We can like pave it nicely, the sidewalks, we can add trees, make it like a walkable, lively street. I think in the long run, this can really help connecting the 2 downtowns and then make one big centralized place of commerce. For real estate investors in the Schenectady area, listen, I know the grass is always greener, but I think if we could work together to almost city plan Schenectady ourselves without the use of politicians, I think we can make Schenectady County an even more welcoming place to live. That's a run through of the Capital Region for 2021. I hope both seasoned investors and beginner investors got a lot out of this video. Make sure to leave a comment if you think I missed anything or if you got suggestions for the next one. And if you did get a lot out of this video, share this with someone who you think would enjoy it. Thank you for watching.